Listen-only mode.
Thank you so much for attending our webinar this morning. So greatly appreciate it. This is Sandy Vicani with Insurance Agency Marketing Services. I'm a supervisor here for Producer Services. Again, greatly appreciate everyone's attendance on this great product with American National. Couple things I want to go over before I turn it over to American National. Wanted to go over a couple of the great items that Insurance Agency Marketing Services offers its agents. Right now, we currently have our Top Producers Escape for 2016. You have from January 1st of 2015 up through June of this year, and to qualify for this, it is a great trip, August 3rd through the 7th, in Victoria, British Columbia at the Fairmont Empress. You can qualify by several different means, whether it's $2 million of annuity premium, 1.5 of whole life premium, 175,000 of our life target premium. Which is great for this American National product, $1 million for a Medicare supplement, or $400,000 in long-term care. What IAMS also offers is a Life and Annuity Academy. This is industry recognized, and I'm actually going to do a poll right now while I talk about this to see who may be interested. So our Life and Annuity Academy is a two-day all-expense paid trip. So we cover all your airfare, lodging, meals, all that great stuff. And what we go over is everything that would affect you in the industry, whether it's the DOL decision that has come down that everyone's getting ready for. It also goes over income riders with indexed annuities, single premium life, which is a great opportunity. We do life sales training. We go over client objections and how to overcome those. And then we break up in little mini groups. We have our top producers there, and we break up in mini groups and go over, again, overcoming those client objections, turnkey seminar systems and different sales ideas and strategies. So a great opportunity. We have, over 400 that registered last academy. We have about 3 a year, and we take between 35 and 40 of those. So I cannot suggest strongly enough that you get your registration in by clicking yes on this poll, so we can send you out the link and some additional information on that. So I am going to go ahead and get that closed out. When you do contract with us, you are eligible for a new producer bonus, which is great. So when you're first contracting with us, you have 6 months to qualify for this. And this is life and annuity, life annuity MedSup, combination of all business. Once you place $100,000 in placed premium, you earn a $750 cash bonus. You could also, choose a 2-year subscription to a website and newsletter service, or you can choose an iPad. If you hit that $300,000 level of placed business, you could choose a $1,500 gift card, $2,000 in matching marketing money to help promote your business, or you could choose a full Social Security program with a 3,000-piece postcard mailing. If you hit that within the first 6 months at $500,000 level, you could actually make your own personal getaway with the Ritz-Carlton Travel Rewards. If you don't want to do that and you want to do something different, you can do a 5,000-piece mailing and seminar coaching with Matt Gill, as well as a 4,000-piece mailing and seminar coaching with Dave Pimper. And all that premium that qualifies you for the new producer bonus goes back to our Fairmont Empress trip. So it's a great opportunity to kind of get that bonus and qualify for a trip as well. Also, when you are an agent of ours and you refer another agent to us, we just would like to say thank you so much. And one of the many ways we say thank you is with a $50 bonus when your referral contracts with us. After that, when they start placing business, as long as they're placing business with us, then you are going to get 20 basis points on any business placed and written from your referral. So it's a great opportunity to say, hey, John Smith is interested in writing. We'll contact them and, handle all the paperwork, do all that other great stuff. And once they start writing, then you get those 20 basis points of a thank you or a bonus for referring them. We also have marketing reimbursement. And with marketing reimbursement, whenever you place business with us, as low as $100,000 in placed business, we'll put $200 in a marketing reimbursement account. What you can do with that is, you submit an invoice for a website or newsletters or leads or anything that has to do with your business expenses. Submit that to us and we will pay for half of that, or 50%, as long as the monies are in that account. So if you have a $400 business expense, we will pay, once you give us that invoice, we'll pay $200 and just write you a check, which is great. We also have just top of the line media design department. They will help you with any of your basic marketing, whether it's just developing a business card or letterhead for your stationery or coming up with a logo for your company. They also will help customize newsletters and come up with newsletters for you, create mail pieces with lead cards, help you with designing a website and newsletter service, or overhauling your current website and, trying to get it a fresh face. They also do advanced online marketing. So, it helps with online video ads and website, newsletter service, plus a paid search management for your local area. They can also do radio and television ads. So there's a lot of great things that our creative department can do and to assist you with. I would suggest that you give us a call and ask for Matt Neal or Adam Bylas. They would be the ones who would assist you and answer your questions. Well, we're also offering, again, same production monies that will count for your new producer bonus, and that great trip to Canada is this. It's called Caddies and Casinos. And with this, it's specifically a theme annuity business that qualifies you. Starts November 1st, 2015 and ends this year at December 31st, 2016. So it gives you a long qualification process. We only need 1.25 million of Athene annuity premium to place for you to attend. This will be in Las Vegas at the just gorgeous Mandalay Bay. So great opportunity for some golfing and gambling, and just a great spot with Mandalay Bay. If you'd like to bring a guest, it's 1.75 million. And again, that started November 1st of 2015 and will run all the way through December 31st, 2016. And at this, I am going to turn it over to Michael Carcello. He is the American National person that is going. Go ahead.
Oh, I'm sorry, Sandy, to cut you off there.
No, you're fine.
Just want to say good morning, everyone. Thank you for joining the webinar. Today we are going to be talking about our new Signature Guaranteed Universal Life. It's a new product that we just launched. It's a guaranteed UL policy that offers a guaranteed lifetime death benefit protection. It also allows for a cash out option on the policy if your needs were to change in the future. A few other benefits that come with this new policy is we do have our Underwriting Express program for premiums $250,000 and below. Also includes the ABRs and highly competitive premium. Today, Tim Cook from American National will be presenting. Tim is an actuary with our product development team. He knows this market and product inside and out. Today, he's going to provide product education and give you a look at how well this product is positioned. While you are listening, think of clients who may need this: divorce planning, key employee, family succession planning, and whenever you're ready, Tim, feel free to take it away.
I got it. Thank you, Michael. Thank you, folks, for having us this morning. Just want to kind of get a review of our new Guaranteed UL product, Signature Guaranteed UL product. We're really excited about this product. Gets us back in the game in the Guaranteed UL market. This product is not your average GUL product, and what it has is the death benefit that you're accustomed to. Guaranteed premium, guaranteed death benefit. However, it gives you access to cash at 3 distinct periods of time: in the 15th year, the 20th year, and the 25th year. And we'll kind of go into that a little bit more greater detail later. That cash is available up to age 70 from an issue age standpoint. It does not add additional premium to the cost of the base contract. It's embedded in there. The pricing includes that guaranteed cash out option that we have with the product. Additionally, it has the living benefits that, if you know our other products in our portfolio, we are a leader in the no cost at issue benefits for chronic, critical, and terminal illness. The same benefits are available on this Guaranteed UL contract, and again, no cost to add that benefit to the policy. This is a dialable guarantee product. The minimum dial-in age is age 95. It is most competitive in that 105 to 95 range. It will dial all the way to 121, and you can dial it to age 103, 107, 110, etc. But it gives you the opportunity to tailor that guarantee for the customer. Where does this product hunt? Well, we aim to be much more competitive above 250 face amount. It's best suited for those recurring premium payments, anywhere from a 10-pay to a 5-pay, all the way to a pay to age 95, 100, 105, 121. That's where the product is aimed to be most competitive. It's not best performance out there in the single pay arena. There's probably better suited products out there for you and the clients out there in the market. It is most competitive for issue ages 65 and younger, which generally, that's why we chose that market, because the return of premium feature, the guaranteed cash out benefit that we have with the product, really kind of sings in that market, 65 and under. A 75-year-old doesn't really necessarily buy a guaranteed UL contract to get their premiums back in 20, 25 years. So it's definitely the younger market of the guaranteed UL space. That guaranteed cash out option, as I mentioned, is price neutral. If we took it off tomorrow, that product the product pricing would be about the same. It really wouldn't change dramatically the pricing that it is for the base contract. And below 250, 250 and under, we do have an express underwriting program under 250 and under, and the price is about the same as what it was before our current offering today. this is my geeky spreadsheet, and just want to kind of give you a heads up again to show where this product really is best suited. Again, under age 65 is where you see a lot of green, and that's, you know, top 5 finishes. A lot of times, you know, top 3 finishes in that range. The pink indicates, you know, a 6 to 9 rank, and you know, red is again probably better suited products out there in the market for you and the clients. This is the 500,000 death benefit guarantee, dialing it to age 100. If I dial it to 105, you get very similar results. And 121, similar type results as well. So the competitive zone, again, under age 65 is really where this product is intended to be priced most competitive. Let's talk about the return of premium or cash out options available in the market. There's been a lot of movement in this space over the last you know, 6 to 12 months. Previously, you know, if you were familiar with Lincoln Benefit, Transamerica, those products had this. We were the 5th company to come out with this type of benefit on a guaranteed UL product. Subsequently, after we launched the product, Symetra kind of joined in as well. The periods that we have available are the 15, 20, 25-year cash out option, and typically you get 60-day window on those policy anniversaries to cash out. If you fail to cash out in those periods of time, and again, that's a complete surrender. You have to wait till the next you know, period of time to cash out the benefit. Now, here's where we kind of differentiate ourselves in the market. Starting in year 15, we give 65% of premiums paid, which is significantly higher than most of the other companies that were in this space previously. Most companies that have been in this space offered a 50% premium paid return. Other companies like AIG and Symetra do not give a 15-year cash out or return of premium option. And even you know, under 250 and under in this range, we give 50% of premiums paid. But again, we aim to be most competitive above 250, and that's really where we tried to ramp up and beef up the return of premiums paid at that point in time in 15 years. 20 years, like the competition, we give 100% of premiums paid in year 20 and 25. Now, here's the other significant feature that we really differentiated ourselves in the market. What we saw when we priced this thing, we looked at the competition and we saw they were, you know, capping the return feature to a percentage of the death benefit. And what we saw was anywhere between 30 to 40% historically that was available in the market. Above 250, our death benefit cap is 65% of the death benefit. That is the maximum at any point in time in the 15, 20, 25th year that you can get. That's the maximum that you can get your return of premium back. Even at under 250 and under, we have a 45% of the death benefit that is the cap, which you know, significantly it's still higher than AIG and Mutual. Now, one thing I want to point out with Symetra, they recently launched theirs. Theirs is an additional premium that you have to pay to add the return of premium rider on there. So they do not have a death benefit cap per se. But I'm going to show you a number of examples where our return of premium that we're allowed because of our liberal death benefit cap of 65% is really in line with that of what Symetra is offering with their no death benefit cap solution, which again does cost additional premium for that for the customer to utilize and exercise that benefit. So here's an example. This is a 45-year-old male, best non-tobacco class. It's a full pay, $500,000 death benefit, guaranteeing the death benefit to age 100. And of the companies that are in this space, we have the lowest premium available. Now, remember, I am including Symetra's guaranteed UL product with the return of premium feature, which, from my knowledge and understanding and what I've looked at the benefit, it approximates about 4% of premium that is added on to the base contract to add that return of premium rider for theirs. And again, highlighting that 65% death benefit cap is significant in the 20th and 25th year. Many times, as this older age market, approaches the older age of the spectrum, you get to a 60-year-old, 65-year-old. Many of the times, AIG and Mutual will actually hit their death benefit cap, which will, force a lower premium, return of premium than we would allow with our benefit. Here's another example, and here's indicates, the substantial cap that comes into play. We don't have the lowest premium in this scenario. Again, as it gets older in the market, 65-year-old approaches 65-year-old, we tend to be a little bit less competitive. But we still have a top 5 finish here in the market as it relates to premiums. And compared to AIG and Mutual, again, in the 20th year, Mutual hits their 35% of the death benefit cap that they can return, the premiums. So in the 15th, 20th, and 25th year, we have a larger return of premium than that of the competition in each and every one of those durations. Talk about term conversions for a moment. We do allow this product to be converted from term into this product. We don't have any restrictions in terms of a 5 or 10 year restriction to kind of wall this product off. This is normal conversion privileges are available. Basically, that equates to the earlier of the end of the level term period or to age 65. And for issue ages greater than 65, we have a minimum 5-year period of time that the consumer can convert to this product. ABRs, many companies have a chronic illness or an LTC type benefit on the guaranteed UL product. But many of them have additional cost to add this benefit at the time the issue for the customer. We have a 101G no cost at issue benefit. Of the other companies that have this type of functionality with the living benefits, Omaha, North American, Penn Mutual, Principal, and Symetra, only North American has critical illness. And again, our critical illness has numerous triggers available. We have a liberal $2 million death benefit return of the acceleration of the death benefit for this living benefit. That is the same for critical and chronic and terminal. It is a $2 million acceleration limit, and we do not have a typical. Our critical illness is not, a 25 or 50,000 acceleration like many of the industry. It can be accelerated up to that 2 million limit. Illustrations and proposals. This is a non-illustrated product. It is not an NAIC compliant illustration or proposal. What does that mean? Well, it's not going to show any non-guaranteed elements or current values. It's only going to show the guaranteed values on the ledger. So you got, much like term, you've got premium, you've got death benefit, and oh, by the way, you've got the guaranteed cash out rider that is shown on the ledger itself. So it's very simplified, streamlined quotes. One thing that we do have a requirement is we do require either a signed illustration or a signed in lieu of form that basically says I was not presented a illustration or a proposal. Why do we do that? Well, that is our indicator. That is our measure or parameter in terms of what the consumer and the agent actually discussed and what they agreed upon as the premium and what they dialed in the death benefit, i.e. 95, 100, 105, etc. That's our measure. That's our metric in terms of knowing what the consumer and the agent discussed. So I feel it's pretty important to understand that those conversations. So when the customer calls in, when they missed a premium, or understand they want to get back on track with the death benefit guarantee, the duration, that is our conversation piece. That's our understanding. So the customer service rep can look at that illustration and identify, well, here's the amount of premium you need to get back to age 100 or 105, etc. This is CVAD only, so you won't have any short pay limitations. You'll be able to illustrate freely the 5 pays, the 10 pays, etc. that were very much competitive in the market. Platforms with this product, we are on more platforms than we probably have ever been on with any of our products. It's available on an proprietary illustration platform. Got a mobile quote out there on the website that you can illustrate this or run quotes just like you can with term, and you can actually show side-by-sides with term. It's available on WinFlex, Web, Vital Quote, iPipeline, CompuLife, etc. So numerous platforms to run quotes and get proposals for the client. Enhancements that we've made with this product, it's a very simple quote platform on our illustration software. There's 3 basic solves with this. You solve for premium amount, face amount, or premium duration. On the premium solve, we've made it easy to quote this product, where we actually have drop downs that show a coverage to age 95, 100, 105, and 121. That makes it easy for you to get in, get out, get your quote. So you don't have to go to the premiums to age or face amount to age. When you click on that drop down to coverage to age 95, 95 will already be populated for the premiums to and face amount to age. We also have a quick calculation within the software that basically is you see that to the right, that says, okay, well, I'm going to run a quote, but when I run that quote, let's say I run it to age 100, we're going to calculate the premium to age 95, 100, 105, and 121 for you automatically. That's nice because I don't have to, run numerous illustrations or proposals, quotes. I can run one, and I can show the customer, hey, here's your premium age 95, 100, 105, and 121, all in one. And as you see to the right, there's substantial difference in premium between those distinct ages. Now, we also have a catch-up premium solve in the software. It's not defaulted to show, but what that does is it gives the customer and the agent an understanding of what the cost if I live to a certain age. A lot of times the customer will tell the agent, hey, I want the lowest cost death benefit coverage. Well, with our product, that's $95. But if the agent is looking at the customer and says, well, this individual, this gentleman or lady appears to be pretty healthy, maybe they want to show them the value of dialing it a little bit older. So, you dial in that 95 premium, but you show the catch-up premiums. And if you're familiar with this product and that of the industry, the catch-up premiums can be substantially more expensive than what you dialed in originally. So by paying a little bit more each year, gives the agent and the customer peace of mind that they will not outlive their guaranteed duration coverage. One last point I want to make with this product is late payments. And these products are very, very susceptible to the timing of the premium patterns within the policy as it's enforced. We have a late payment forgiveness feature that is 1 month forgiveness. Basically, what that does is it gives the individual peace of mind that if I'm late up to 1 month after the premium due date, we will apply that premium as if it was received on the premium due date in order to maintain that guaranteed death benefit. A lot of folks are marketing a late payment forgiveness of, a month, 30 days, 28 days, 31 days, etc. Only a few companies out there in the industry are bold enough to make this contractual. And in a premium pattern where you're expecting a 45-year-old to pay premiums on time every year for 50, 55, 60 years, knowing that the company cannot take away that payment forgiveness later on is significant peace of mind for the customer and the agent to maintain that guaranteed death benefit. Consumer habits are hard to break, and if a customer knows that they have a 1 month forgiveness, a lot of times they may pay late frequently during that period of time. And again, if a company has the ability to change that down the road, that can definitely have a negative impact on the death benefit guarantee duration. So top reasons to sell, kind of summarizing what we discussed today. We do have flexible guaranteed death benefits from age 95 all the way to 121. You can dial in at any point in time during that period of time. We do have the 3 points in time for complete surrender to get access to the cash or the premiums paid into the contract. We have very liberal maximums or limitations in the cap of the death benefit. It is 65%. That's much more than many other companies that have been in this space today. And again, we do not charge extra premium to add that cash out option. It's available all the way up to age 70 for table ratings up to table 4 and $5 flat extras. That's kind of the limitations that we put in place. We do allow this product to be converted from term. Again, our normal conversion privileges apply. We do have accelerated death benefit riders that are no additional cost to the consumer. And again, it includes critical illness with very competitive acceleration of $2 million of the death benefit. The contractual late payment forgiveness is definitely a key point to have that in the contract to guarantee that the customer has peace of mind that we'll give 1 month late payment forgiveness that guarantee will maintain as if the premiums were received on the premium due date. Significant to put it in the contract, folks. Again, simple quotes, non-NAIC illustrated product, easy to run and understand, again, on numerous platforms to quote and illustrate the value of the low-cost death benefit protection along with the guaranteed cash out and accelerated benefit riders. I'll open it up for any questions folks may have.
And thank you so much, Tim. This is Sandy. So greatly appreciate it. While we're looking at questions, I am going to send out the poll question on whether or not you would like for us to send out paperwork, contracting paperwork for American National. So if you are already contracted with us, we can complete your contracting with paperless contracting, so there's no additional paperwork that you would need. If you are not contracted with us, then we will send out a 4-page universal contract, very simple. You fill out those 4 pages, send it back with your AML, E&O, and license, and we'll go ahead and get you set up on the paperless contracting system. So in the future, there will be no additional contracting paperwork you would need to fill out for any additional carriers. As Tim was saying, any questions, let us know. American National is a great carrier, very easy to work with. Also does, great term as well as this exec UL. So let's see. I think you've done such a great job, Tim, going over the product that we have no questions. So that is a good thing, and we have a lot of great people wanting contracting for American National as well. So I'm going to hold it open just a little bit longer for questions. Nope, no questions. So I'd like to thank everyone for attending. So greatly appreciate it. Thank you, Tim and Michael, for giving just such a great presentation on American National. Anyone has questions or need quotes ran, please give us a call and ask for anyone in the life department. Phone number 1-800-255-5055. Again, this is Sandy Vicani, and I would be happy to answer your questions, run any quotes that you may need. We do have one question here. Let's see. So for tax considerations on receipt of funds, can you go over that, Tim?
Yes, you're never gonna receive premiums above the cost basis in the contract. While with certain advanced sales concepts out there, we encourage folks to seek tax advice from their accountant, etc. But I think the only point where you really have a point is in there where there's a key employee or key man type situation where you are looking at the employer paying the premiums and then potentially handing off the contract at retirement for them to have the contract. But again, never exceeding the cost basis in the contract with the return of premium feature that we have. So we feel like there's no issue.
And someone asked if they missed part of the webinar. We will send out a recorded webinar on this to everyone who has registered. You'll receive that later on today. Tim, can you have a plan with a term writer for this? An agent likes to know.
We do not have term writers available on this contract at this point in time.
I think it would be better just to take out a whole new term contract to begin with, frankly, which you have great competitive products for. So
we do have competitive. One last thing I failed to mention is, we've been asked periodically, can you do a partial and a partial surrender with the return of premium feature. The one thing, the way our product is priced from a banding perspective, if I buy two $500,000 policies, the premium for that is going to be very similar to what it would cost for a $1 million policy. There's really no big band break at 500 and $1 million. The only band break that you really have is from 250 to the next band that starts at 250 There is significant band break, and that's the only reason why there's a significant band break there is we have express underwriting up to 250. Above 250, it is fully underwritten type of issue. But again, buying two policies, if I buy two policies at 500, I can cash out one of them and keep the other one. So it's kind of a mini sales idea there that we've seen numerous folks try to take advantage of thus far.
All right, and on that note, I think we are going to end. Again, Tim and Michael, thank you so much, and thank you everyone for attending this webinar. You all have a great week.
Thank you, folks.
Thank you, Sandy.